everyone, and welcome to the December version of your Daily 5, the last one for the tumultuous 2020 that's ending with the market on new highs. So what I thought I would cover for you today is an interesting segment, since people are asking me all the time, how will we know when the top is in? The irrational exuberance, the greed factor, the fact that mom and pops are saying now it's time to get in the stock market. All this has people extremely nervous. But of course, nerves and the rational market could stay intact longer than you can stay solvent. So there are some outliers that we can look at and keep an eye on as we end the month of December and go into January that would give us very good clues about whether or not this market is tired, ready to roll over, simply correct, go sideways and consolidate for another blast off higher. And here we are. We're going to look at volatility. We're going to look at the high grade bonds. We're going to look at the long bonds, the junk bonds, the dollar, the gold, the oil, and utilities. Sometimes is a very good indicator as well of what's happening in the market, very interest rate tied. So let's begin. So let's start with the VIX. Now the volatility, this is actually not the cash index, but the actual VXX instrument. And right now we can see that this has obviously been in a downtrend since we had the peak of the pandemic here. And so as such, what's interesting though is that looks like even with the market making new highs, volatility index has not made new lows. It actually had a peak low here at 1628. So that means right now that even though we've had a little bit of a sell-off a few days ago, this is holding the 10-day moving average. So the volatility index is not fully convinced yet that this market could sustain this rally. And of course, at the time I'm speaking to you, there's still talk about the stimulus going through. We have the final Fed meeting coming out, whether or not they're going to pay attention to the fact that retail sales are down while the yields have been slightly up will be interesting. We'll take a look at that chart. But nonetheless, from a strictly technical standpoint, with this 10-day moving average we have here at 1744, and as I'm speaking to you, with this holding above that level, this could actually start to get a little bit interesting now if we can get through that 1850 level. So that's what I would be watching for here. Now, if we go down to real motion, which is our momentum indicator, you can see that the momentum here has been Obviously that makes sense, right? But again, just like the price made a new low here on the momentum and on the price chart, the actual momentum itself is holding steady, sitting on this Bollinger Band. What I would really be watching for, and the beauty of having momentum indicators, is if we start to see the volatility index take out that 50-day moving average. And of course, if we move down here to the leadership, it's still slightly underperforming the S&P, but not by very much. So this could be one clue. I'm not saying that we've had a signal yet. I'm saying that this is a really good thing to watch as one of the clues. Now, the other thing I want to look at with you is LQD. So this is the high grade bonds. The reason why this is so important to look at is because this is really what I've been calling the Fed's playground. The Fed has been buying high grade bonds and junk bonds pretty much since the pandemic, when we had the swoon in February. So as you can see right now, we're still very much in a bullish phase. We're above the 50-day moving average here. We're actually above the 10-day today as I'm speaking to you, which is at 137.19. And so we come down here at the momentum indicators, and the momentum, obviously there's no divergence. Here was the high, and here was the high of the momentum, and we're going sideways as the price is going sideways. What is interesting though, if I bring this momentum indicator down a little bit, is that we're still underneath this Bollinger Band right here. You can barely see it, but it's right here, the Bollinger Band. So right now the momentum is holding, but it's not blasting off. What would be an indication that perhaps things are unraveling? I think would be if we start to not only break down under this 137 level, but clearly if we start to see a phase change under that 50-day moving average, and if we start to see those momentum indicators cross below the moving averages. If we take a look at the leadership here, obviously with the SPY making new highs, this is not showing any great leadership. I'm not as concerned about that, but nonetheless, that is another thing to keep an eye on in terms of the bullish scenario, looking at it the opposite way, is if this starts to retake leadership and the momentum can clear that Bollinger Band, then we can definitely say at this point, things still look pretty darn good out there. Now let's go to the junk bonds. And this is really the best indication for risk on. So we can see right now that we have a risk on environment. This is also same thing, very much in a bullish phase, actually has recently made new highs, multi-year highs. And at the same token, sitting on that 10-day moving average as we're going into a Fed meeting today, or Fed minutes anyway, with an inside day sitting above that 83.71. So now if we take a look here at the momentum indicators, we can see that the momentum, when we had the peak momentum, we are actually now higher in price and a little teeny bit lower in momentum. Not much to read into yet, but again, what you want to watch for now is either for momentum to continue to move up, or if it starts to roll over, takes out this Bollinger Band, takes out the 50-day moving average, even if the price is still chopping around as perhaps an early indicator there as well. And you can see that it's been underperforming the SPY after it had been outperforming the SPY back here. So this also is something very interesting to watch, because if risk on stays risk on, then it's very comfortable for the bulls. But if that picture changes at all and we start to see this sell off, that could really also be a great early sign. And it was actually an incredible early sign for us back in January, February, when it started to break down. We knew something was a little bit rotten in Denmark even before we saw this huge price dump. So it's a really good way to look at things. Now, just the opposite is looking at the long treasury bonds. And we know that the rates are low, very low, and that the Fed has basically promised that they're going to continue to stay low. But what we are seeing, though, is a bit of the rise in yields. So as I was mentioning to you in the very beginning, what we want to look at here now is for this to be able to give us an indication on risk, the opposite of what we saw with junk and with high grade. In other words, if this starts to move up, then we can see that there's a bit of a flight back into safety. Now, we did have a double bottom here at around 155, a little bit lower, but still that figure that 155 level. Each time we got there, we gapped. We did it again, we gapped. We sort of testing it on this day that I'm talking to you. So I'm really looking now at that 50-day moving average, or move over 59. That would give me some fair warning. At the same time, if we break down under this 154 level, then the yields are going to be going up, and that would be probably negative for some of the interest rate sensitive instruments like gold, for example. And of course, if we look at real motion is showing that it's sitting, no divergence, it's sitting here right on that Bollinger Band, trying to figure out whether or not the momentum will continue to decline. Or if we see it through this 50-day moving average, that too would be an interesting divergence, especially if it happens before the price. And of course, no surprise here, it is underperforming the SPY. Now, if we move on, those are my major things to watch. Now, if we move on from there, let's look at the dollar. We're going to look at it through the UUP. And you can see that we had a gap lower here in the dollar. Obviously, real motion is showing that it's no divergence, just going down, and it's well underperforming. This dollar going down is good for stocks. I'm not saying necessarily that if it starts to flip up, it's bad for stocks. But what it is interesting is something that you'll get to hear me talk a lot more about as my end of year outlook, in terms of the possibility of really igniting inflation, particularly if the Fed starts to be more accommodative again. as this weaker dollar is making the cost of goods more expensive for how much you can buy for a dollar. You can buy a lot less, and it's really given quite a boon, particularly to the food commodities, not so much to the gold and silver, although they're starting to catch up, as we'll see in a moment, but also, of course, the Bitcoin, which has become this interesting inflation hedge over the last several months. So right now, what you want to look for is the possibility of a dollar bottoming out here, maybe an island bottom, or maybe going higher. So that brings us to gold. Right now, gold really at this point has not necessarily been the great hedge over impending inflation. However, it has more of a geopolitical sense to it right now, and it's really stuck in this range. We had a nice exhaustion gap here. I would be watching now for a clearance of the 50-day moving average to see if we get into a bullish phase. And you can see here that the momentum is still really not very impressive. So at this point, these rallies, I'm not necessarily following, but I'm watching with a very careful eye here to see what happens, particularly as we go into 2021. And with that, of course, is USO, because the oil has actually been creeping up. We did see a divergence, and I actually showed you this divergence in another session when this was clearing on the real motion above the moving averages before it did on the price. That finally happened here just as we were starting to see the momentum increase, and it's still increasing, slacking off a little. This will be a real wild card for 2021. People were so negative in oil. It's trading at around $50 a barrel. If this continues to go up, I think that would also be good for gold, but also really prove my inflation theory. And it's still slightly underperforming. And the last one I'm going to show you is the utilities, which of course has a couple of things very interesting about it. One being it's tied to the electricity demand, which is what I did for StockCharts last week. And that really is something that we have to keep an eye on as electricity demand with electric cars is really increasing. But nonetheless, it's also interest rate sensitive, so it's going up even though the yields are tightening here, and it's holding really tight here. You have a great risk at around 61.75. If we can actually get not only through the 50, but also through the 50 on real motion. So this is another one, because sometimes, or as what I like to say, when Uncle Utilities shows up at the door, then you sometimes have to pay attention to that. So that's it. You all have a wonderful holiday. Merry, happy New Year, and I'll see you in January. Thanks so much for watching. Bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.